Hi everyone. So in the last class we have already completed section 40 clause A, subclause IA, and also your subclause I, right? So now from today's class we are going to start with section 40 clause A, subclause 2 or 2I, right? So this particular section speaks about whether income tax amount paid by the SSC will be allowed as a deduction or not. So the answer is income tax paid in India or paid outside India in the law of any other country is not allowed as a deduction. It is not allowed as a deduction. Why? Because paying income tax is a personal liability. Even if it is under the income tax act of any other country, still it is not allowed, right? So in this class we are basically going to cover four to five small sections of section 40, right? Now the next point says that, which is your section 40 clause A, subclause IIB. Okay, so this particular section says that if any royalty or license fee or service charge are paid by a state government undertaking, paid by a state government undertaking to a state government, right? So in that case what happens, it is not allowed as a deduction in income tax. Okay, it is not allowed as a deduction. For example, Odisha Hydropower Corporation Limited, OHPCL, it's a PSU, it's a state PSU, right? So this particular PSU, if this state government undertaking is paying certain amount as a royalty to the central to the state government, to the state government, so in that case what happens, that amount will not be allowed. But in this section, another small catch is there, which says that this section is applicable only if it is charged exclusively from a particular state government undertaking. Right? For example, there are three state government undertakings which are dealing with power generation, right? But the state government is taking royalty from only one, right? Exclusively from one SGU. So in that case only this particular section will be applied, and whatever amount of royalty is being paid to the state government, that amount will not be allowed. But if all the three power generating companies are there, power generating state government undertakings are there, and all of them are paying royalty to the state government, so in that case this deduction will be allowed under section 40 clause A, subclause IIB, right? This is clear. Now, the next section is section 40, clause A, subclause triple I. So, this particular section says that TDS on salary payable outside India or to a non resident. Okay, so we know that generally the date for the due date for TDS is 7th of the next month, right? So, in this case, it says that if the salary is payable outside India, or if the salary is payable to a non-resident, and if TDS has not been paid or the TDS has not been deducted, right? So in that case the salary amount paid to such non-resident or payable outside the India will be disallowed. Why? The very same reason which we had studied in the last class. In the previous class we studied, right, why 100% disallowed has been made in case of NR. Similarly, the very same logic will be applied here also. So this particular section says that salaries payable outside India or to a non-resident in India are allowed as deduction only if the TDS has been deducted and the TDS has been paid within the time limit prescribed by the Act. But if the TDS has not been deducted or not been paid within the time limit prescribed, then it will be totally disallowed. Right? Now in this case, for example, the if the TDS has been deposited lately by one day, suppose by one day, for example the due date was on 7th of next month and the TDS was deposited on 8th of next month. Even if it got delayed by one day, still it will not be allowed as a deduction. Now, another point that we need to remember is that the SSC forgot to deduct TDS from the salary. Okay, from the company forgot to deduct the tax, the TDS, from the employee's salary. And on 7th, before 7th of next month, the company paid or company deposited the TDS amount from its own pocket, right? The company did not cut TDS from the employee's salary, but the company submitted or deposited that particular TDS amount to the government within the due date. In that case also it will not be allowed. Why? Because obviously the main reason was to deduct TDS from the employee, which was not done properly. Hence it will not be allowed, right? Now coming to the fourth section, which is section 40, clause A, subclause 4, right? Which speaks about employer's contribution to provident fund or any other fund. Okay, so this particular section has some connection with section 36, subsection 1, clause 5. Okay, if you go back to that particular section which speaks about employers contribution towards approved gratuity fund and employers contribution towards pension scheme, etc., which we studied in section 36. So that section, in that section I already told you that there were two boxes: employer contribution. One had statutory provident fund, one had recognized provident fund, approved gratuity fund, approved superannuation fund, NPS, and any other fund, any other law, under any other law, right? So they were allowed. But in the right hand side another small box was there where the employer's contribution to the funds which are not allowed was mentioned. There it was mentioned unrecognized provident fund, unapproved gratuity fund, and also unapproved superannuation fund. So all these things are not allowed under your section 40. The very same thing is mentioned there. If you read the legal language, you will be able to understand. Now coming to the next and the last section for today's class, which is section 40, clause A, subclause 5. So this particular section speaks about payment of tax on behalf of employee. Payment of tax on behalf of employee. So any tax actually paid by an employer referred to in section 1010 CC. Okay, any tax actually paid by an employer. So in this case, to understand this particular section, let's take a small example. So now you can see the example on your screen. It says that X Limited is a company and Mr. A is the employee of X Limited, right? And Mr. A is drawing a salary of 6 lakhs rupees. Along with that, some non-monetary perks like your car and house help, etc. These non-monetary perks equal to 2 lakh rupees per annum. So the total NTI will be how much? 8 lakhs. If you calculate tax liability on this, then what will be the amount? Basic slab rate लगा के अगर आप tax liability calculate करोगे, then the tax liability amount will be 75,400 rupees, right? So now the question is that generally what happens, the tax on non-monetary perquisites, being tax on non-monetary perquisites is the responsibility of the employee. But instead of employee, if the employer decides to pay tax on the non-monetary perquisites from his own pocket, from employer's pocket, then what happens? Tax on on such non-monetary perquisites shall not be deducted at source. It shall not be deducted at source from the salary of employee. Why? Obviously because the tax on it is being paid by the employer itself. So why to deduct TDS from the employee's salary, right? Now so इसको हम legal language में we can say that the employer is going to discharge this burden, right? Employer is going to pay the tax liability on non-monetary perks, can be written as employer is going to discharge this burden. So in this case, such tax amount shall not be taxable in hands of the employee. It shall not be taxable in hands of the employee. And as it is being, as it is not being charged in the hands of the employee, so it will not be allowed as a deduction to the employer also, right? Coming back to the example, since the tax liability of Mr. A in this case is 75,400 rupees, so this total amount can be divided into two parts. One is on the salary of 6 lakhs, and another one is on the non-monetary perquisites of 2 lakhs. So if you apportion them, then the tax on non-monetary perks will be how much? 75,400 divided by 8 lakhs multiplied with 2 lakhs, right? So in this case the amount is coming as 18,850. So this particular amount of 18,850 is the tax liability on non-monetary perks, right? And this is supposed to be, in this case, this is supposed to be paid by the employer X Limited, right? So in this case, this is exempt under section 1010 CC in hands of employee. In hands of Mr. A, it will be exempt, and this particular amount cannot be claimed as a deduction uh, by the employer by virtue of section 40. So this amount the employer or the X Limited cannot claim as a deduction, right? I hope this is clear. So that was it for today's revision class. In the next class onwards, we will again continue with section 40 because it's a very long and interesting section. I really hope you have understood whatever we studied today and in the previous class, because I know the previous lecture was a very big one. And yes, after studying this, you just simply need to go and solve a few questions, give 40 or 45 minutes to PGBP, and your PGBP will be done. So that was it for the video. If you find this video helpful, then please hit the like button, subscribe to my channel the Witty Turtle, and also don't forget to hit the bell icon so that tomorrow you'll be notified when I'll upload a new video. And also don't forget to share this video with your CA, CMA, inter and final